Yo, what's good everybody? Welcome back to part 5 of the course. Today's video we're going to be continuing up with the last video's discussion on market structure. In the last video, we identified market structure using the path tool. We determined that this is bullish structure because we're creating higher highs and higher lows. We know that inside of bullish structure we're looking for buys. On the flip side, we know that this is bearish structure because we're creating lower highs and lower lows. In this scenario, we are looking for sells. And we also determined that in consolidation, such as this right here with equal highs and equal lows, we are not doing anything. We're staying away from the charts because ultimately the trend is our friend. And in consolidation, in consolidating market conditions, there is no trend. So if the trend is your friend and there's no trend, that means you have no friend. So you should stay away from the markets and wait for a breakout or break of structure. We also learned that in bullish structure, price will remain bullish and we're looking for buys as long as the last significant higher low is respected. Now, let's say price, breaks it, that becomes a break of structure. So now we're in a bearish market. So now we're in a downtrend, creating lower highs, lower lows. And we know that price will remain bearish as long as it respects the last significant lower high. So as long as this area is respected, it'll be bearish. Obviously, structure flips whenever we break that last significant lower high. So that is the basics. Now, in this video, we are going to be going on to the charts and identifying, these key concepts of market structure. Personally, I always determine my market structure on 4-hour charts. Just remember that, if you're having a hard time identifying market structure, just go to a higher time frame. It's a lot easier to identify a market structure on higher time frames. And with that being said, higher time frames, the market structure on there it's just going to be a lot stronger and, more dependable than, your little 15-minute trends and 30-minute counter trends and stuff like that. So when determining market structure, stick to the higher time frames such as your daily and your 4-hour. All right, so diving right into these charts, as you can see, let's just start off right here. Okay, as you can see, we have created some equal highs throughout this little range here. Now remember, what do we do if we're getting equal highs and equal lows? We know that that is a range. We are sitting on our hands. We are not doing anything. As you can see, we have equal lows, equal highs. What are we waiting for? We're waiting for either a bullish breakout, which is what we got, or we're waiting for a bearish breakout to start looking for sells. As you can see here, market structure flipped from a consolidating phase to bullish breakout. Boom, we create a high, we pull back for a higher low because this low is higher than the previous, and then we make a higher high. So now we know that this price structure is bullish. We're looking for buys unless this right here gets broken. Why is this so significant? Because this is the last significant higher low, because this is where the push for the new highs was started. So we have higher highs, last significant higher low. We're bullish looking for buys unless we break through. As you can see, it's exactly what we did. So now at this point right here, we are now bearish. We're looking for sells in the market because we broke the previous last significant higher low. So now we are looking for sells. We get a pullback. This is a great trade. We're not going to go over entries or anything right now. We're just going over market basics. But anyways, so we create a lower high and then pretty much created a lower low, a lower high. And then the market really pretty much said, peace, like I'm dropping out. So we created a very, very steep low. This is a pretty good example. But for now, we know that we have new lows and price is bearish. We're looking for sells unless the last significant lower high is broken, which is right here. That's how I see structure. Some people might have it up here. Some people might have it down here. However you see structure, cool. But these are my rules and kind of my guidelines for how I determine structure. Now, obviously, as you can see right here, we get something that could be really confusing for most traders. We get something that looks like this. So at this point, in my ideologies on market structure, I am still bearish. I'm still bearish because this is my last significant lower high. But some people would determine this as bullish structure because we're creating, higher lows and higher highs. This low is higher than this low is higher than this low, so on and so forth. So some people would see this as bullish. I don't believe that this is bullish structure until we break the last significant lower high. So I'm still looking for sells. Obviously in this example it would have been the wrong thing, but nonetheless we finally did break out of the last significant lower high, and we pull back, creating a higher low. This low is higher than this low, and then we make a higher high. This high is higher than the previous, and then we pull back really all the way to here. No, we did not break structure. What did we do? We respected this previous low, creating equal lows. And then what happened? We are still bullish, looking for buys, and market goes up, creates new highs. So now this is our last significant lower high, bullish as long as we stay above it. Pull back, creating a higher low, higher high. As long as we stay above this, we respected it right here, creating an equal low. So now we're still bullish. And then as you can see, we really did kind of consolidate a little bit right here. We create kind of equal high, equal high, equal high, so on and so forth. But then we broke through right here, creating a higher high, pull back for a higher low, meaning this low is higher than the previous. We're bullish, we create higher high. Now we're bullish as long as we stay above the last significant higher low, which is right here, because this is the higher low that created the higher high. Very simple concept. As you can see though, structure did flip because we broke through that. So now we are bearish. Why? Because we broke the last significant higher low. Now we're bearish. So now we create a lower high, lower low, so on and so forth. You get my gist. You get my vibes. This is a pretty good example right here. This is kind of the last thing I'm going to go over. It's a pretty good example right here. So we know that we are now bearish. So this is the lowest low, or the lower low. And we know that this low was created by this lower high. So now we know that this is the last significant lower high. As long as we stay below that, we're in sells. So all throughout this range, we're looking for sells. Unless, price were to break the last significant lower high, or unless price breaks lower for new lows, which is what we did over here. As you can see, market structure, something like this, creates new lows. So now the only thing that happens in this scenario, we're still bearish, but the last significant lower high changes. Instead of being this point, it changes to where? This point. Why? Because this is now the new last significant lower high, because these are the new lows. The push that created these lows started right here. It's the last significant lower high. That is market structure basics. Now remember, if you're having a hard time seeing market structure, or markets look choppy, or you just can't determine it, one thing you can do is go to a higher time frame. So just if you're on the 4 hour, go to the daily. If you're on, the daily and you still don't see market structure, probably wouldn't be trading, because that means you're in a range. If you're on the hourly, go to the 4 hour. If you're on 15 or 30 minute, get off the 15 or 30 minute. Because remember, these lower time frames, that market structure is not going to be as strong or as significant as the higher time frames. So with that being said, guys, that is market structure. We went over the basics, and then now we just talked about, market structure on charts. We determined, break of structures, higher highs, higher lows, lower lows, lower highs, all of it. And, that really is what market structure is. Now understand that identifying market structure helps us determine the trend. The trend is our friend. If you place enough trades in line with the trend, you're probably going to be profitable. So stick to the trend, keep finding market structure, and remember, if you're not good at it right now, take your ass to TradingView, hop on the charts, grab the path tool, and do exactly what I just did. Okay, go back through previous data and mark out these last significant, or the lows, the lower highs, and all that stuff. With that being said, guys, I'll see you on the next one. Peace.